Welcome back to another edition of the Optimize Weekly Market Recap. I'm Josh Brown, Portfolio Manager with Optimize Wealth Management. For today's recap, we will take a look at last week's market activity and some highlights from the week ahead. North American indices ended the week down, as continued good economic news from the US meant bad news for potential rate cuts. The S&P 500 was the best performer, down 51 basis points, while the Dow and Nasdaq were down 98 basis points and 1.1% respectively. In Canada, the TSX fared better, down 23 basis points. Shifting to sector performance, energy and real estate were the strongest performers, while technology and industrials were the weakest. Looking at the events from last week, the latest Canadian GDP growth rate number came in, showing improved quarterly growth of 1.7% annualized, but lower than market expectations. Scotiabank, BMO, RBC, CIBC, and National Bank all reported earnings last week. With the exception of BMO, all came in above market expectations. In the US, GDP growth from Q1 came in lower than expected at 1.3% annualized, with previous estimates expecting 1.6%. For the week ahead, in the US, ISM Manufacturing and Services Purchasing Manager Index numbers are expected as indicators of the strength of the US economy. As well, several key employment numbers are expected to showcase the effect of the economy on American workers. In Canada, the Bank of Canada's next interest rate decision is due, and the current consensus is expecting a cut, as well as employment data as a sign of the health of the economy. On the earnings calendar, we have a light week, with the only major name being Broadcom. Thanks for joining me for another market recap. I hope you have a wonderful week, and we look forward to seeing you next week.